Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well, and if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency while drinking a cup of delicious coffee. That being said, in today's episode we've got the latest BTC or Bitcoin price analysis, some Ethereum 2.0 news, Cardano updates, our usual 404 Logic Not Found segment, and a whole lot more. But before we get into all that stuff, let's kick it off with questions from the community, and I'm going to pull those up now, but if you want one of your questions answered, make sure you leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit the little bell button down below so you can get a heads up whenever I post new content. Thanks in advance. Now, the very first question is from Gary Allen. He says, new sub here, enjoyed your video and info, thank you very much. Dumb question. I can see opportunities for having a few cryptocurrencies in the future. I don't understand how these altcoins can survive. Is there really a need for this many or so many different types of coin? This is a great question, and I think a lot of new investors or new people come into the market and they're thinking to themselves, how are all of these different cryptocurrencies in existence? How do they survive? How can I possibly evaluate all of these? Because there are so many. And I remember early on when, there were only a few options. There was really only Bitcoin, Dogecoin, Litecoin. There was only a few. And it was a lot easier then to be able to research and to learn. There's so many now. The reality is, Gary, that most of these cryptocurrencies are not going to survive. A lot of these projects are vying for one of the probably 10 places per niche that will exist in the future. And that's being very, very generous. I think that there's going to be certain places like Oracles, for example, where there will be a lot of different projects that can survive. So you might see Link, Band, Teller, API 3, a bunch of different projects survive and thrive. But you will also see in other niches where there's really less, variability, or there's less demand, there might be places that struggle. There might be networks that specialize in DeFi. There's not going to be like 10 to 12 DeFi networks. It's going to be a select few. So the reality is that when you're investing, you need to bear that in mind. You need to go out and you need to look at it from the perspective of what problem does this network solve? Who are the competitors? How likely is it that this project survives? Are they too late? Were they too early? All of those things you can think about to sort of determine where you're at in terms of adopting and investing. So hopefully that helps. Second question of the day is from Kevin Small. This video kind of answers my question that I asked a few days ago about the lifespan of hardware wallets. So this is about how Kevin's ledger kind of went down and he couldn't move his funds until he was able to move to another wallet with his seed phrase. Basically, long story short, his hardware wallet failed. He had to use the recovery process. Now, I bring this up and I talk about this question because I think this is another thing that new investors need to be aware of. Your hardware wallet is built out of technical components, out of hardware components that don't last forever. And so you look at things like flash memory, those things have a finite lifespan. Your Ledger Nano S might not last forever in terms of its hardware. If you have a device with a built-in battery, that battery is not going to last forever. So what that means for you is your backup procedure and your recovery procedure has to be airtight. You have to have your recovery seed phrase backed up securely and in a place where you can always find it and where it is safe from, basic events like fires, for example. That's where a steel plate will come into play. And honestly, I think that this is something that people need to be aware of when they go and buy a hardware wallet. Having redundancy is always good, but also there are wallets like the BC Vault, for example, that use components that will last you a lot longer because they're trying to address this very problem. So just be aware of that. I think that the lifespan of hardware wallets is something that people don't think about because it happens over, 8 to 10 years rather than a couple years, but just bear that in mind. Thank you for your question. And then I have a question from Richard Illingworth. You say, set a point to take a profit. Can you go into this a little bit in more depth? Several coins I'm invested in. I've always figured that if or when they hit a certain price, I'll take out a set amount. Where do most people set this amount? Fiat or Bitcoin or somewhere else? So this is another great question, kind of going back to what I talked about last week. And that is, to be honest with you, the process by which you can protect yourself from market movement and the way that you can sort of take the emotional part out of investing. And I said to sort of set profit points where you want to take some out and then lock in some profits. And so, Richard, the way that I go about this is I set a point in terms of my a percentage, right? So then it doesn't matter whether you're evaluating it in terms of how many Bitcoin you have or how many dollars you have, right? It doesn't matter because you're looking at the percentage. So if I set that point, I look and I can use cointracker.io. It's a tool that I use all the time for taxes and portfolio management. And I'm able to sort of see where each individual gain or loss is based on any Bitcoin that I've purchased or I've received. And it's fantastic in that regard. So if I see, okay, I'm up 20%, right? Let's say I buy Bitcoin for $50 and I say, when this is up 20%, I'm going to sell it. That's kind of the way that I go about it. I go about it in that way and I look at percentages and then I say, I'm going to set this and I'm going to take it out. And I can either write that down in an Excel spreadsheet or I can just go into, I have a notebook. I keep track of certain things, but it's a really, really great way for you to set that point, know you're going to hit that point, or if you hit that point, I guess you're not always going to, you'll take it out. And the same thing goes for stop loss, right? If you're not trading on an exchange that has stop losses, you can always sort of use this method as a stop loss in your own mind, right? You set a notification on, your wallet tracker application. When it hits a certain price, you go and sell out to stop loss. Fantastic way of going about things. And I think that it really does help because you aren't sitting there like, should I take profit? Should I sell out of this? Should I move here? Should I do that? Because you always will kind of get stuck in two minds when you do it that way. But if you have a plan, you will be more likely to execute on that plan. I'm not going to say it's 100%, but Richard, hopefully that helps. And I hope it helps folks that are watching. Now, I know we only did a few questions today, but they were a little bit more long-winded. But for those of you who are new here, every week in partnership with the folks at Cobo, who make the awesome Cobo Vault wallet, I'll be giving away a Cobo Tablet Steel Seed Phrase backup in every episode from here on out. And all you have to do to enter the random draw is comment down below on the video every single week, and I'll pick a winner by random draw online. So just for transparency, though, the product is only available in the US, Canada, and Europe. So if you win and you're from another region, I'll just send you some Bitcoin instead. Now, the winner of last week's giveaway for the Cobo is shown here on the screen. You'll see that random draw going. And I wanted to give a big congratulations to you, and I will be in touch to help you claim your prize. Now, I know everyone right now is concerned about Bitcoin and its price movement, so we can just go ahead and start there. Of course, last week's episode was all about the rapid run-up to Bitcoin's price on the market, with peaks this week reaching over 19,000 US. Very near the 2017 all-time high, I might add. Lots of speculation began to spark, though, on social media after that sort of price run-up above 19K, and as well on the major crypto news outlets, that the new bull run was officially here, and everything was peachy keen. Everyone was really happy. But we also talked last week on Crypto Over Coffee that it was very likely that we'd see a pullback or two before we did end up seeing a new all-time high. And towards the end of the week, this past week, it was evident that that was in fact the case. Prices ended up receding back into the 16K range. I think it even touched into the 15K range, which of course was likely bolstered by a heavy dose of panic as those who started to buy in late in this whole bull run period started to lose a lot of money, and they were really, really worried, so they sold out. But is it really time to panic? Usually the answer is no, and I don't think that this is much different. Anyone who's been around a while in the wild ride that we call crypto, you'll know that big swings like this have happened fairly often, and usually rebounds happen in response to big pullbacks. We even saw a mini rebound. We're back above 17K, I think, at the time of recording. And that being said, I think that relatively low volatility in the markets recently has sort of lulled people to sleep. It's made this steep increase and sudden drop and then bounce back seem that much more scary because people aren't used to this type of volatility. Now, if you look back, though, to 2017 and even several years in the past as a guide, it suffices to say that every major price uptick to new all-time highs has in fact been preceded by one or more significant price drops. And this could very well be no different. I would be far more concerned personally if we just kept rolling past previous all-time highs like it were nothing and then crossed into the mid 20K territories before the end of the year. That would indicate to me another big bubble bull run composed of finicky retail investors that FOMO'd in and had no plans of investing for the long term. This particular market cycle is going to be determined heavily by institutional investors and corporations, which will then subsequently draw in new retail investors that will be invested in it. Now, what I do want to tell you, though, is that not all corporate buy-in is 100% positive, even though the news might make it seem that way. For example, this whole PayPal crypto offering, it's a double-edged sword. It's not all good. Bitcoin and crypto will become a payment method for many more people, and it will be fantastic marketing. But it does set a bad precedent that the only means by which crypto is used is to convert to fiat currency to buy things. And then also it reinforces the idea that crypto can be held in custodial storage at all times with no penalty. Both of those things are very bad. It's not true adoption if users don't own their own crypto. And if paying for goods and services means you can only convert crypto to fiat in real time to buy it, there has to be some sort of path to actual usage of crypto for payments, in my opinion. Now, this, among other things, will have to happen for Bitcoin and other crypto to truly reach these astronomical figures that you might see on the latest hype piece of the day online. You need true adoption, the ability to use crypto for true utility, and I don't think PayPal is the one that's going to drive that. Now, speaking of adoption, the long road to Ethereum 2.0 adoption has officially begun with the successful fulfillment of the Beacon Chain deposit contract mere hours before the deadline for the December 1st launch. Many of you messaged me to tease me about my frustrated prediction a couple weeks ago that the Ethereum 2.0 deposit contract would not be filled and the launch would be delayed because it didn't get filled in time. And you are correct. I can admit I was totally wrong on that. Wrong take. I'm happy to have been wrong, to be honest with you. Happy to be wrong. I was concerned, though, that there seemed to be very little interest in the deposit contract at first, and it was only filled to the threshold of over 500,000 Ether within hours of the deadline. That would have otherwise meant that the release date would have been pushed out even further. Now, the successful funding of the deposit contract for Phase 0 means that around December 1st, the skeleton or the bones of the Ethereum 2.0 network, the brand new network that will be in the future, will go live. Now, this will contain the main Beacon chain, or the main canonical chain that will one day hold transactions that are reported from the many Ethereum shard networks when those features go live in future phases for the scalable Ethereum 2.0 network. Also included in this Phase 0 launch will be the slow launch sequence for the proof of stake consensus mechanism that will be used in the final Ethereum 2.0 network when it goes live for everyone. Now, the Ether that's been committed to the deposit contract will be credited to users on the new Ethereum 2.0 Beacon chain, and then will be used to start the staking and validation that will one day power Ethereum's day-to-day transactions and network validation processes. This is a monumental, but preliminary achievement in what is a multi-year release plan for this bold new network. And the work is only beginning. So this is very exciting. I think this is a really good sign. But as someone who works on Ethereum services and dApps and products quite often, I am super excited to see the launch of Ethereum 2.0 finally begin to take shape. It's going to be a long road. It's going to be challenging. There are going to be, trapdoors and pitfalls along the way. And it'll take time and patience, but what a wonderful and exciting time to be part of this space. There's so much to watch, so much to learn, and so many opportunities to get involved. Now, for you Cardano fans out there, or even just holders of ADA, the latest parameter change to the staking and incentives protocol that governs reward rates and ideal stake pool size will definitely start to affect your earnings in December, so this might be of interest to you. There's a parameter in the stake pool and stake reward model that defines the sort of ideal number of pools that need to exist in the network to help drive decentralization. And that parameter is called K. Now, the K parameter is moving from 150, where it is now, to 500 in early December, which means the ideal pool volume on the network is going to more than triple. This also means that the large pools with a high saturation of ADA delegated to them are going to begin earning fewer rewards for delegators as the network tries to incentivize delegators to move to new and smaller pools to reach that 500K value to expand the breadth of the network. What this ultimately means for you, though, the casual ADA delegator, for example, is that you need to start scoping out smaller, unsaturated stake pools to delegate to in order to maximize your rewards. You're looking for a mix of pools that have some less than 32 million ADA staked, and then maybe some that also have between 32 million and 64 million ADA staked in order to maximize your rewards. Again, the smaller the better. Now, this adjustment of the K value is a natural way for the protocol to disincentivize larger pools from dominating and becoming a really crazy powerful force in the network. And then subsequently, it incentivizes further expansion of the stake pool ecosystem to newer and smaller pools. So before the 6th of December 2020, make sure to switch your delegation over to some small pools. If you need some inspiration, though, you might want to consider the Kind stake pool, which I mentioned a few episodes ago on Crypto Over Coffee. The pool donates 25% of their yield to charity and offers cool ways for delegators to earn extra rewards, which I'm a fan of, and I, for one, am really, really interested in seeing how that pool does. There are also, though, some other small pools like Kind that got a lot of love on Twitter when I asked the community to share their favorites. So I'm just going to list their ticker symbols here so I can get as many listed as possible. But of course, do your own research before delegating and validate if they are indeed small enough to fit the bill. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm gods, please do hit that like button and get subscribed to the channel, because it tells the YouTube robots that you're enjoying what you're seeing, and other people might also enjoy what you are currently watching. So thank you for that in advance. Now, I would like to present to you today's absence of logic. And it is a prime example of how a once important cornerstone of cryptocurrency adoption is becoming the antithesis of cryptocurrency adoption within just a span of a few years. And that would be Coinbase. Now, it's well documented that Coinbase has had its internal issues, with employees given marching orders after internal politics reportedly wreaked havoc on morale. And then there's now a recent report now alleging racism and discrimination within the ranks as well. But there have also been operational problems that are completely out of control for a company that took in over $2 billion in revenue in 2019. Now, I'm sure you might have noticed as a crypto investor watching this channel that whenever there's a huge sort of volatility spike in the crypto market, something's happening that's good or bad, Coinbase seems to just conveniently go dark. Their website, their app, their core services, they just go kaput, meaning no trading for you. Now, I have to tell you, I've worked in tech in various positions, ranging from the start of my career in corporate IT, doing hardware work and server work, all the way to building software every day for small, medium, and large-scale applications. And I can tell you that very few, if any, modern tech companies with this amount of capital have this type of piss-poor reliability and availability at peak times. And with the resources that Coinbase has, they should be always on. They should handle any load that comes their way. And they should do it in a super fast and reliable manner, which begs the question, what is going on here? I wouldn't dare lay any accusation without any evidence, but for anyone casually observing, there are folks asking me all the time if it's purposeful that the service goes down at pivotal times. And look, no one has any concrete evidence of this that I've seen, so I cannot possibly postulate one way or another as to whether or not they're doing this. But what is uncontroversial, though, is that there are other big exchanges and services out there, in the US even, that handle these peak times without even a hiccup. So there has to be something else going on behind the scenes. Now, the moral of the story is something like this, though. Even the most impactful and innovative companies can take a turn down the wrong path and fall from grace in any industry. And for Coinbase, this is kind of how it's starting to feel. I remember when their app first launched. I remember it like it was yesterday. It was like the dawn of everything in crypto. It was finally becoming mainstream, was finally becoming usable. And I'm appreciative for what their work did to bring us to where we are today. Undoubtedly, they were important. But with the performance they've had lately, I just don't get the same warm and fuzzies anymore. I'm not excited about new products that they launch. And with billions of dollars, one should be able to build a reliable application architecture. So 404, logic not found. Now, in other news, I read an interesting article this week about the PlusToken Ponzi scheme. You might have heard about it. It reared its ugly head in 2018. And it was basically predicated on a group faking as a high-yield South Korean crypto exchange that was promising crazy returns on investment. Now, recently, Chinese authorities seized nearly $4.5 billion, billion with a B, worth of crypto assets that were in the custody of this scam. And there have been over 100 arrests made in relation to the one-year 2018 to 2019 operation of this Ponzi scheme. Now, I have to say, it's shocking that such a simple operation pulled in billions of dollars from unsuspecting investors. It really just goes to show that there really is no doubt that it's still the Wild West today in crypto, and even promising projects that have great claims need to be approached with a significant amount of skepticism. So please do keep your wits about you. If it's too good to be true, it is. For those of you who might not know about this next project, though, there's a decentralized storage network that I've been quite interested in lately called FileCoin. Now, FileCoin is a network protocol that incentivizes miners in the network to contribute storage space in return for rewards. And it started to pick up steam in terms of technical achievement over the last, I would say, year or so. And just recently, the team announced that it hit a total of 1 exabyte. I'll show that on the screen. It's like a huge, huge data capacity metric. They hit 1 exabyte of total data capacity on the network, which for scale could hold close to 100 million 4K movies. Now, this type of network, if done properly, could hold the keys to more functional decentralized applications whereby application logic lives on, say, Ethereum, but the data for the application lives on FileCoin, where it's cheaper to store and access. So it's a very, very interesting concept here. I'm not saying this is, a project that you need to invest in by any means, just something to take a look at, and I'm going to be following it more over time and reading more into the tech. As always, folks, thanks so much for watching Crypto Over Coffee, and if you have time to stick around, I'll link a video here for you to watch. But regardless, I wish you and your family a safe and restful weekend, and I'll catch you on the next one. Cheers. Reward weight, reward.